almost about to begin. So all those who have entered the regal room late, let me remind you to either switch off your cell phones or turn them to the silent or vibration mode. All the delegates, invitees and guests who are yet outside in the adjoining area are requested to kindly proceed towards the conference room. We will begin any time now. The chief guest of this inaugural session, Honorable Union Minister of State for Finance, Mr. Jayant Sinha, is already at the venue, as I have informed you. He is in the hotel premises. As soon as this regal room sees his arrival, we will begin the inaugural session. The guest of honor for this session is Madam Arundhati Bhattacharya, Chairman of the State Bank of India. She is also on her way, and we all are waiting for the chief guest and the guest of honor to arrive in the conference area, which will enable us to begin the inaugural session of the 8th Banking and Finance Conference organized by the Indian Merchants Chamber in association with the Institute of Chartered Accountants of India. And the theme, we all know, is Changing Contours of Banking and India's Growth Aspirations. Take you through the proceedings after the inaugural session. There won't be any break, ladies and gentlemen. As soon as the inaugural session is over, we will begin the third technical session, which is on financing of SMEs, to be followed by the fourth session on, and that's a roadmap for digital banking in digital India. With that last session, we will conclude this day-long conference, which began with the ICAI session on management of NPAs and role of audit. Before lunch, we had the second session, and this was on Indian banks, how to reach global size and efficiency. That the wait will not be more than a minute longer. Session. Honorable Union Minister of State for Finance, Mr. Jayant Sinha, is here with us. A very warm welcome to you, sir. So is our guest of honor, Madam Arundhati Bhattacharya, Chairman, State Bank of India. Sir, I request you to light the auspicious lamp first and then maybe step up on the stage. We will begin with the ceremonial lighting of the auspicious lamp as per the Indian tradition. Request the chief guest and the guest of honor to kindly do the honors. Request other dignitaries to also join in. Deepena lokana jayati, deepas tejo mayaha smritaha, chaturvarga pradodeepan, tasmad deepyajet priye. This couplet in Sanskrit translates, the lamp is luminous, its radiance grants victory. Its light imparts dharma, artha, kama, and moksha, that is, righteousness, prosperity, pleasure, and finally, emancipation. This, ladies and gentlemen, is the significance of lighting a lamp, and hence, a lamp should be lit. Lamp, as we all know, is also a symbol of knowledge. The lamp being lit, the function being inaugurated, I request all our esteemed guests and dignitaries to kindly occupy their seats on the dais. Our chief guest, Mr. Jayant Sinha, Honorable Union Minister of State for Finance. Guest of honor, Madam Arundhati Bhattacharya, Chairman, State Bank of India. Mr. Dilip Piramal, President, IMC. Mr. Chandan Bhattacharya, Chairman, Banking and Finance Committee, IMC. CA M. Devraj Reddy, President, ICAI. Mr. Mahesh Thakkar, Co-Chairman of the Banking and Finance Committee, IMC. Mr. Arvind Pradhan, Director General, IMC. And Mr. Jitendra Sanghvi, Deputy Director General, IMC. Welcome, everybody. I request the President of Indian Merchants Chamber, Mr. Dilip Piramal, to kindly welcome our chief guest, Mr. Jayant Sinha, Honorable Union Minister of State for Finance, with a bouquet of flowers. So kindly accept this as a token of reverence and love. I request Mr. Chandan Bhattacharya, Chairman of the Banking and Finance Committee, IMC, and former Managing Director, State Bank of India, to present a bouquet of flowers to our guest of honor, Madam Arundhati Bhattacharya, Chairman of the State Bank of India. I now call upon Mr. Dilip Piramal, President of IMC, for the welcome address.
Good afternoon, everyone. Mr. Jayant Sinha, Honorable Union Minister of State for Finance, Ms. Arundhati Bhattacharya, Chairman SBI, Mr. Chandan Bhattacharya, Chairman Finance and Banking Committee IMC, distinguished dignitaries in the audience, ladies and gentlemen. On behalf of the Indian Merchants Chamber and the Institute of Chartered Accountants of India, it is my great pleasure to extend a warm and hearty welcome to all of you at the inaugural session of our 8th Banking and Finance Conference on changing contours of banking and India's growth aspirations. A special welcome to Mr. Jayant Sinha and Ms. Arundhati Bhattacharya, who has spared the valuable time to be with us this morning and grace the occasion despite their hectic schedule. Mr. Jayant Sinha, sir, we are honored by your august presence at this conference, which is a flagship event of the Chamber. Your presence as the Union Minister of State for Finance at the highest policy-making level shows your commitment to interact with the business leaders in the financial capital of the country so as to understand the issues, and is very commendable. Sir, there is no doubt that much of the input of this year's excellent budget has been provided by you. A large part of the achievements of the ministry in restoring macroeconomic stability in these terms of global uncertainty and successfully reviving the financial sector is due to your personal involvement. And I am saying this more because Jayant Sinha is from the business sector and the financial world, whereas our finance minister is a very great lawyer. So he gets, I think, the financial acumen is a large part his. Srimati Arundhati Bhattacharya is at the helm of affairs of the largest bank in the country, having 20% market share in deposits and loans amongst Indian commercial banks. Madam, I may recall here that you had addressed our banking conference held in June 2013 as MD and CEO of SBI Capital Market, and in May 2014 as Chairman, State Bank. You are thus no stranger to our chamber and its activities. There is no doubt that such interactions provide an excellent opportunity to learn, share, and pool our intellectual resources for mutual benefit, as well as the benefit of society at large. Our system is rich in innate potential. All that it needs is some out-of-the-box thinking to help us realize it. As we all know, in this age of competition, our banking and financial system is facing intense pressure, not only from private banks, but also from international markets. The operational structure of banking in India will be transformed in the near future due to the emergence of new players. Under the impact of deregulation, innovation and technological upgradation, banking institutions are becoming increasingly complex and constantly coming out with newer services to meet the changing needs of their customers. The PM's push for Digital India has also impacted the banking sector by exposing it to areas requiring newer techniques of risk management. In fact, the entire face of banking, particularly retail banking, has changed because nowadays there is no need to have a branch structure and you can have virtually banks just operating on the internet. With globalization and international competition, several aspects of the functioning of our financial sector will need to change. Banks will have to develop strong risk management capability and the ability to use various tools cost effectively to manage their exposures to an increasingly uncertain environment. The industry is currently in a transitional phase with many public sector banks being saddled with large and increasing NPAs. Quickly resolving the issue of sticky loans and preparing our banks to reach global size and efficiency in a time-bound manner is one of the key challenges facing the industry today. Sir, we are confident that your personal involvement, commitment, and innovative approach to the problem will result in its early solution to the satisfaction of all stakeholders. You have taken a number of initiatives which will start paying dividends soon. A few words now about the century-old Indian Merchants Chamber for the benefit of our honored guests and special invitees. Established in the wake of the Swadeshi movement by our visionary business leaders, the 108-year-old IMC has done the country quality service during its long and tumultuous freedom struggle. Hence, the father of the nation, Mahatma Gandhi, accepted the honorary membership of IMC. Ours is the only chamber in the country which has this privilege. We have around 2,700 direct members comprising a cross-section of the business community, including public and private limited companies and over 225 affiliated member associations, through which the Chamber reaches out to over 250,000 diverse business establishments in the country. We have a strong ladies' wing, as also a young leaders forum to mold the youngsters who are the future of this country. Our current theme is job creation through skill development. This reflects our concern for maximizing our unique demographic dividend. Our demographic profile is certainly well suited to switch to digital behavior. A vibrant banking system can support and enhance the Digital India initiative and enable future generations to realize their growth aspirations within an overall inclusive and eco-friendly way of life. Digital banking has a key role to play in promoting financial inclusion. Digital platforms can deliver financial services to both the unbanked and the underbanked population, especially in rural and remote regions at a low cost, and subsequently increase digital financial success to provide high-quality, affordable financial services. By using digital channels, transaction costs can be lower than those incurred through traditional channels by as much as 90%, thereby reducing break-even costs and enabling an efficient scaling of the model. In fact, it is my firm belief that this entire digital economy is going to benefit the poorest sections of the people the most. And I think that is something which our Prime Minister is using so effectively, and that is going to change the face of this nation. The economic development of the nation represents both a challenge and an opportunity for our banking and financial sector, which should make appropriate risk management and the development of digital banking a policy priority, and adopt international best practices to modernize infrastructure and services, and thus pave the way towards realizing India's growth aspirations. The strategic use of technology will enable banks to target previously unbanked and financially excluded segments of society and thus tap vast new markets. This could provide the necessary traction of the development of new demand, as urban markets have now become fairly saturated. In the ultimate analysis, progressive government initiatives, regulatory support, and the proactive participation of both public and private players will be the determining factors in enabling a successful transition to realizing India's growth aspirations. In conclusion, I would like to congratulate Mr. Chandan Bhattacharya, Chairman of our Finance and Banking Committee, and his co-chairman Mahesh Thakkar, as well as all of his team, which has worked diligently for organizing this conference so meticulously. In fact, any president of any chamber or any organization requires people like Mr. Bhattacharya, and they are a real boon. They handle everything independently, and they are a real asset. Thank you, sir, once again, Mr. Bhattacharya and Mahesh Bhai. Their unstinting cooperation has ensured the success of this mega event of our chamber. Before ending, I must thank all our esteemed guests once again for their gracious presence in our midst today. Thank you.
Thank you, Mr. Piramal, for sharing your valuable thoughts on this happy occasion. I'm sure they will be of immense benefit to all present. And now may I call upon Mr. Chandan Bhattacharya, Chairman of the Banking and Finance Committee of IMC, for the introductory remarks.
Respected Sri Jayant Sinha, Honorable Union Minister of State for Finance, Madam Arundhati Bhattacharya, Chairman, State Bank of India, Mr. Piramal, President of IMC, dignitaries on the dais, ladies and gentlemen. IMC's Finance and Banking Committee has been holding events regularly covering diverse subjects of topical interest and deliberations. It is my pleasant duty to present today's themes for the conference. Today's theme is another step in that direction, and it has been selected considering the evolving banking scenario, especially as banks confront the headwinds of uncertainty in global and domestic economy, severe pressure on their income, profitability, and challenges of new demands and growing competition. The Indian banking scenario is changing fast. New banks are coming, new types of banks like small banks, payment banks are coming. It is therefore in the interest of all stakeholders that the changing contours of banking be clearly understood and put in the context of our growth aspirations. After all, there is no doubt that this sector is the key contributor to the economic growth. Our country's demographic profile has a strong bearing on the level of its acceptance of digital banking and other financial innovation. We are fortunate that it is in our favor. We now have to match the two together and manage the inevitable risks. There is no doubt that digital banking will contribute immensely to economic growth by lowering transaction costs. At the same time, it is the SME sector, the growth engine of the economy, that stands to gain the most from it. After all, small business collectively is really big business for the banks. The topics for the day's programs are: in the morning we had two sessions. The first session covered the Indian banks, how to reach global size and efficiency. It was especially relevant if we are to remain our competitive advantage in globalized world. In the second session, ICAI had the management of NPAs and the role of audit as the theme for their discussions. The third session, after the inaugural session, will be devoting to the financing of SMEs. The SME sector has emerged as a vibrant and dynamic sector of the economy over the past 5 decades, and it will need to be adequately financed and nurtured if it is to maximize its unique potential. In the last session, we will have the roadmap for digital banking in Digital India, which is an important contemporary development. The Government of India is taking many initiatives to develop the digital ecosystem, and it will surely, amongst other things, help promote financial inclusion. It has today become an important tool for an efficient banking system, and Indian banks have put in place a fairly strong infrastructure to leverage its benefits. Digitization is a key facilitator for the transformation of Indian banks, particularly in terms of lowering their transaction costs which directly impacts economic competitiveness. In conclusion, let me reiterate that change is an inevitable part of growth in the banking and financial sector. The changing contours of banking and India's growth aspirations necessitate a strategic use of technology to put in place a robust financial infrastructure. That is the way the Indian banks will be able to compete with their global peers and achieve efficiency and scale of operation. The mass adoption of technology across various customer segments, owing to the emergence of smartphones, the wide availability of 3G and 4G networks, etc., have paved the way for increased customer expectations, complex product structures, and various alternate delivery channels as emerging trends in the banking industry. Interesting times lie ahead of us. Today's conference aims to catch up on these aspects. With this, I thank the MOS for taking time off from his busy schedule, and also the chairman of SBI for kindly agreeing to attend this presence. On behalf of the conference organizing committee, I personally give them my thanks and best wishes to you all.
Thank you, Mr. Bhattacharya, for putting forth your perspective in context of today's conference, and of course for taking us through the day's program. I now request CA Devraj Reddy, President ICAI, for his address.
Respected Jain Sinha ji, Honorable Minister of State for Finance, Government of India, Mrs. Arundhati Bhattacharya, Chairman, State Bank of India, Mr. Dilip Pirimal, President IMC, Chandan Bhattacharya, Mahesh Thakkar, Aravind Pradhan, Jitendra Sanghi, Honorable Vice President of CA Institute, Nilesh Vikamsi, Dians of Indian banking industry present here, guests, press and media, good afternoon to all of you. I am delighted to be present amongst the glittering gathering of our banking industry. Annual conference on banking and finance organized by the Indian Merchant Chambers is entered into the 8th edition, and this annual gala event has made itself a niche in the initiating thread-based discussion on the latest developments in the banking sector and developing roadmap for future actions based on the inputs gathered. I am pleased to note that Institute of Chartered Accountants India association with this annual event of Indian Merchant Chambers goes long back. The theme, Changing Contours of Banking and India's Growth Aspirations of this year conference is quite contemporary, as the changes which are being introduced and which are in the pipeline have never seen before. We have been invited to share our thoughts on a topic which is quite relevant and widely deliberated nowadays, that is management of NPAs and the role of audit thereof, and that has been done in the initial sessions of this conference. As a regulator, the Institute always strives hard to ensure that its members maintain high professional standards and technical excellence in the performance of their work and services. The ICA is assuming its responsibility and has always been providing continual educational inputs on bank audits to its members through lectures, teleconferences, seminars, issuing guidelines also. Friends, I may emphasize that healthy banking industry is the backbone of sustainable socio-economic growth of an economy. The credit policy and other banking policy decisions can effectively help economies to channelize credit from areas of abundant credit to areas of deficit credit, and hence set the tone of sectorial development in the economy. The banking industry is thus an important tool for any country to keep its citizens belonging to diverse strata of the society in the mainstream. By lending credibility to their financial statements, audits and auditors have an extremely important role to play in building resilient banking industry. Further, society now also expects bank auditors to help strengthen the governance practices in the banking industry. The challenge for the accounting profession lies in seamlessly integrating these expectations in their role as statutory auditors, internal auditors, and concurrent auditors. Thus, audit quality, as in any other audit, is of great significance. Obtaining adequate understanding about the risks present in the banking system, as well as the internal and external environments in which a bank operates, is essential. As a corollary, auditors are understanding of the bank systems and process in a place to identify and address Those risks would help the auditors to focus on critical areas, design appropriate audit procedures, decide optimum time and resource allocation, timely execution of work, and avoid any last-minute surprises. In recent times, it has been seen that volume of non-performing assets has increased substantially. For all the past few years of growth and reform, banks in India have continued rolling over troubled loans or restructured them to make terms favorable to borrowers. In the December quarter, of the 40 listed banks, 10 banks had gross bad loans of more than 8%, while 22 banks had in excess of 5%. As we are all aware, the Governor, RBI, has set a deadline for banks that by March 2017, banks have to clean up their balance sheets and treat some troubled loans accounts as bad and make provisions for them by the end of March 2016. The aim is that the cleanup, which started in the December quarter, will restore the health of banks, revive lending, and in turn boost economic growth. The government had already started the third phase of reforms in the public sector banks and will look into all aspects, including consolidation. In this regard, a two-day Gnan Sangam Summit was also held, a forum where the highest officials of public sector banks, government, and the Reserve Bank of India met to brainstorm future strategy. Another development was the formation of the Banks Board Bureau that has been assigned the task of selection of the heads of public sector banks and financial institutions, and will also help banks in developing strategies and capital raising plans for banking sector. One meeting of the board has already been held and another being scheduled from a couple of days now. It is our wish if the scope of Banking Board Bureau may be enlarged further, and it may also look into the appointment of central statutory and branch auditors of the bank. The Finance Ministry is working very closely with the RBI on the asset quality review, and that as stressed assets have stabilized. The government has already kept aside a substantial sum for the recapitalization of public sector banks. The Insolvency and Bankruptcy Code, when enacted, will finally give creditors a way of collecting repayment through the judicial process in reasonable time. Another significant development is the introduction of Unified Payment Interface by the RBI through the National Payment Corporation of India. This step is another new age initiative to make our economy as paperless economy, having due audit trail that will help the government to track flow of funds. We are sure that market turmoil will pass, the cleanup will get done, and Indian banks will be restored to health. While we shall not underline the dimensions of the task, we are confident that it is manageable, and the government and RBI will do what it takes to make sure that banks are able to support the tremendous growth that lies ahead. We are also wish to join RBI in the implementation of Indias for all the banking system. Before I conclude, I am delighted to inform this August gathering that the revised scheme of education and training of CA course that was approved by the Council of IC has been also formally approved by the Ministry of Corporate Affairs, and accordingly revised regulations are being published in the Gazette of India for the public comments and also hosted on ICA website. I request all of you go through the proposed regulations and offer your comments so that expectations of all stakeholders from this vibrant ocean can be captured well. As a leaders, all of you have to follow ethical value standards so that we can help the economy in a better way. As Lord Krishna Gita says, Yadyata charate tatta devestaro, estratam krute lokastana vartate. The elders, the nobles, what they follow down the line will follow. So as an example, we follow, definitely we can reach and we can clean the banking system in a better way for the betterment of the economy. With these few words, I would conclude and wish the conference a resounding success. Thank you.
Thank you, Mr. Reddy, for your uplifting insights and, of course, for extending your best wishes to the conference. I now invite the guest of honor, Madam Arundhati Bhattacharya, Chairman of the State Bank of India, for her address.
Good afternoon. Honorable Minister of State for Finance, Sri Jayant Sinha, office bearers of the Indian Merchant Chambers, other dignitaries on and off the dais, members of the media, ladies and gentlemen. I am indeed privileged to be sharing this dais with such dignitaries, and I thank the Indian Merchant Chambers for giving me this opportunity to speak on the changing contours of banking and India's growth aspirations. Since early 2016, 3 issues have acquired considerable prominence in respect of Indian banking. One, the sharp rise in NPAs at banks and losses or a fall in profit at several public sector banks. Two, a reported proposal to create a government entity for asset recovery. And three, the setting up of the Bank Board Bureau for making top appointments at PSBs. So much has been the focus on the first issue that the broader context of banks' digital transformation, which is critical to India's growth aspirations, have almost lost appreciation altogether. Let me start by saying that yes, India's banking sector is indeed going through a period of stress. It is as if the global financial crisis is affecting the Indian economy and Indian banking with a lag. However, it would be unwise to draw conclusions or prescriptions about Indian banking by looking at performance indicators over only the past 3 years of stress. One has to consider the post-reform period as a whole, and in particular, the decade of 2003 to 2012, and most importantly, the boom period of 2004 to 2008. As the Indian economy contracted by 2011-12, India's banking sector took a beating. Some of the questions asked about Indian banking in the early 1990s are now being asked all over again. However, there are crucial differences in the context. First, the share of private sector banks has risen over the past 2 decades, and at least some of these players of this part of the sector are less affected than PSBs, and naturally so, as PSBs still account for the lion's share of banking assets. Second, banking has grown in size and sophistication over the past 2 decades of banking reform. And third, the banking sector is being opened up after a lull, and all incumbent banks face challenges from an altogether new set of players. The boom of 2004 to 2008 was predominantly driven by private investment, especially investment in private infrastructure, and it is often described as the root of stressed asset problems today. PSBs, that is the public sector banks, substantially funded this boom in investment and the consequent acceleration in India's growth rate. They now face the downside of the loan exposures they had taken at that point of time. To the extent that some of the private banks took lower exposures to this sector, they have been less badly impacted. However, there is an unnoticed paradox in this story. The Economic Survey of 2014-15 highlights this issue very well and is worth quoting in full. What the Economic Survey says is this: indeed, one of the paradoxes of recent banking history is that the share of the private sector in overall banking aggregates barely increased at a time when the country witnessed its most rapid growth, and one that was fueled by the private sector. It was an anomalous case of private sector growth without private sector bank financing. Thus, the reticence of the private sector was striking. To go on, to add to this, the Nayak Committee's assessment is based on a comparison of the performance of PSBs and private sector banks at just one point of time, 2013-14. PSB performance has indeed deteriorated since 2012-13, and a gap in the performance has opened up between PSBs and private banks. However, a wide body of academic literature shows that over a longer period, consequent to reforms, the performance of PSBs has tended to converge towards that of private banks. In fact, I think this is something that is not really debated in the public domain as to how even the NPA numbers of the PSBs and the private sectors have actually moved almost in tandem, with the private sectors actually showing a higher amount of increasing amount of NPAs when the public sector was coming down, and then subsequently the vice versa, that is the public sector NPAs going up when the private sector was actually coming down. So basically, if you look at over a longer period of time, you will find that the CAGR in both are almost equivalent. Hence, to set the present discourse right, the thesis that the public sector character of banks per se is an obstacle to performance does not stand up to scrutiny. On the contrary, the lesson of the decade of progress, 2003-12, is that given strong management, a measure of autonomy, and the discipline of the market, PSBs have the capacity to perform well in the face of private competition. I think this is something that needs underlining. This is something which the government also has recognized, and that is one of the reasons why the Bank Bureau has been set up, and we are hoping that this autonomy, this inability to bring about better skills and HR capacities into the private sector, that these will be the areas that the BBB will very quickly address. Let us also not lose sight of the fact that successive deficient monsoons in 2014 and 15, it was the fourth case of 2 consecutive All India deficit monsoon years during the last 115 years, that is starting from 1901 to 2015. And this also explains why demand has been waning despite correction in prices, leading to compounding of the stress on banking books. Now I turn to the central topic of my address, that is, how will the contours of the banking sector change in the coming years? In my opinion, there are 3 dimensions to this change, and all of them have considerable weight. The 3 dimensions include competition, technological disruption, and regulatory and disclosure regimes. The first 2, namely competition and technology, interact with each other on a scale that has never been seen before. The banking sector in India during the reform period has gradually become more competitive, with the share of the top 5 banks in the total market share falling from 46% in 1998 to 39.5% today. Today, competition in the banking sector will come from several sources: new full-scope banks, foreign banks, banks with differentiated license, and non-bank players, including technology firms. The recent decisions by RBI to grant licenses to 2 private sector banks, a number of payment and small banks, to further the cause of financial inclusion has been the driving force behind this competition. The potential of technology, namely mobile technology, to deliver banking services was well recognized way back in 2010. The cost-saving potential of information, communication, and technology, that is ICT, is apparent as mobile banking-based transactions cost about 2% of the branch banking cost, 10% of the ATM-based transaction cost, and 50% of the internet banking cost. Banks that succeed in digital or mobile banking can expect to see an increase in low-cost float funds. They can also better access and analyze data on customers, especially retail customers, and thus reduce non-performing assets. Digital banking can also increase productivity of back-office operations. They can generate income on a wide range of payments. However, it is the entry of other non-bank sector companies through their investments in small banks and payment banks that have changed the dynamics of competition in the sector. Hence, there are some legitimate concerns whether banks, and in particular the public sector banks, will survive this onslaught. However, I feel that the risk from this source of competition has been overplayed more than required. This is because neither the payment banks nor the small banks seem to have as yet devised a business model that can be adjudicated as viable. For telecom operators who are facing their own set of technology shocks, payment banks may be a way of preventing churn in their core customers for mobile banking services. A mobile customer who is also a customer for payment service will be less free to migrate to a competitor for mobile services. Hence, it is hard to see payment banks taking away customers or income from commercial banks in a big way. similar arguments hold for a small bank. In this context, there is one other thing that I think we need to also draw everybody's attention to. India did have a very large small bank sector comprising of the cooperative banks, the local area banks, and the regional rural banks. Very little is actually being talked about this existing banking sector and as to how these should be modernized. There is a lot of media space that is actually afforded to the payment banks and the small banks. There is very little attention given to the state of the current cooperative banks and the RRBs, the regional rural banks, and how these existing structures can be made suitable for the competition that is going to come. In fact, the feeling that I get as one of the players in the banking sector is that people seem to have given up on the smaller banks that are already existing. I believe that this existing sector needs reforms very badly. They are not actually controlled by the central regulator, that is the Reserve Bank of India. The regional rural banks is controlled by NABARD. Their ownership is fragmented in the sense that they are sponsored by the center, the state, as well as the sponsor bank. So also the cooperative banking sector, which is under the Registrar of Cooperatives. It is important for us to also talk about this narrative because these are banks that are already established. They have large number of customers. They also employ a large number of people. As we talk about the small banks coming in, what is it that the government machinery and the regulators, what is it that they are doing in order to make sure that this existing banking sector that is already there in this particular area, that they are made ready for competition and that some amount of handholding is provided to these people in order to up their game as well. However, the biggest gain from technological innovation for banks is that it improves customer retention and helps attract savvier, higher income, and potentially more profitable customers. One can expect to see this happen with digital banking. Younger customers and the mass affluent will want the convenience provided by digital banking. They will therefore migrate to banks that can provide this convenience. These banks can expect some increase in their return on assets as a result. Digital banking may also alter the composition of banks' banking book, with retail segment becoming the primary driver of growth. In fact, we are already beginning to see this, and especially in view of the kind of headwinds that banks have encountered in project finance, you will find that almost every single bank in the country is now going more after the retail model. The one segment of banks that have withstood these hard times have been the segment that have been retail focused. And obviously, as a result of that, every other bank is now being goaded on to follow the same model. We must, however, remember, India does not have anymore the developmental financial institutions that it used to have earlier. The IDBIs and the IFCI and the ICICIs of the world, most of them have converted into banks. Even IDFC, which was basically an infrastructure player, is now a bank. And therefore, if we as a developing country are only going to advise banks to follow the retail model, who then is going to do the project financing? Or are we content as a nation to stay where we are with no further need of infrastructure? I think these questions need to be asked. I think even in the media, the narrative that is coming across, that also needs to change. Because at the end of the day, if we are a nation that is still developing, if we have not yet achieved developed status, then there will have to be lenders who will come on board in order to finance Indian growth. We need to empower the banks to do it rather than rap them on the knuckles for having done it. In fact, mistakes have been made. Mistakes have been made by all stakeholders. Each stakeholder needs to do a deep dive to realize what were those mistakes made, to learn the lessons in order to ensure that they are not repeated. Having said that, we also need to understand, no matter what scenarios you guard against, there will be some scenarios that are not known. And therefore, there will be some mistakes that you have not thought of, which might come home to roost in the future. But then, should that stop us from funding the growth of India? Banking is one of the most regulated sectors. The burden of regulation has only increased after 2008. The contours of banking will substantially be altered depending upon how regulators perceive the future risk, public interest, and financial stability. In line with this, the MCA has announced the much-awaited IFRS, or what is now Ind AS, implementation roadmap for the financial sector, and scheduled commercial banks are required to comply with these standards of accounting beginning from April 1st, 2018. In this endeavor, the banks would need to deal with challenges resulting from implementation of expected credit loss-based provisioning framework, classification and measurement of financial assets, and impact of alignment of the regulatory guidelines with IFRS on regulatory capital computations under the Basel III framework, leverage, liquidity ratios, etc. Huge capacity building initiatives at the level of both the regulator and the banks are required. While it may not be possible to precisely quantify the impact of India's implementation at this stage, rough estimates globally indicate a transitional impact of substantial increase in provisioning levels on account of implementation of ECL-based provisioning framework. Remember also that the data we'll be working with will be in respect of one of the most stressed periods of the economy. Although the rationale for such regulation is not questioned, the timing has coincided with technology disruption and competition. Hence, it will be a challenge for the banks for optimally maneuvering both forces in tandem. Banks in India will have a major role to play in India's growth aspirations. The contours of banks' banking sector are changing in line with the aspirations of young India that is becoming more technology-oriented. Although banks are facing stress in asset quality due to unforeseen circumstances, their investments in digital banking technology will pay dividends once legacy issues are sorted out. And I would like to confirm that the legacy issues will get sorted out. Banks will continue to face competition, but the immediate threat has been overplayed if one factors in the bank's response to competition. Changes in regulatory and financial reporting regimes will add extra challenges to banks' operations in future and will have an impact in their banks' decisions. But I take comfort from one fact. The good things about such times are that such times have always been there. And therefore, if we have faced challenges in the future and have overcome them, if the country has indeed progressed and is today looked on as one of the bright spots in the entire global economy, I believe that the challenges ahead of us will end up in strengthening the banking sector. We will learn a lot from the reversals, but we will also understand how to go ahead. I believe the need of the hour is basically a collaborative stance from the government, from the banking sector, from the industry, and from the regulators. And that, I believe, will really give us the solutions as to how we proceed. Thank you.
Thank you, ma'am, for addressing this elite gathering comprising people related to the banking and finance sectors in a variety of capacities, and of course for raising those very thought-provoking questions for one and all to ponder, and a very refreshing end note. Well, I now invite the Chief Guest, Mr. Jayant Sinha, Honorable Union Minister of State for Finance, for the inaugural address. Sir.
इस कार्यक्रम में उपस्थित श्रीमती अरुंधति भट्टाचार्य, चेयरमैन स्टेट बैंक ऑफ इंडिया, श्री दिलीप पिरामल, अध्यक्ष इंडियन मर्चेंट्स चेंबर, मंच पे विराजमान सब महानुभाव, मीडिया के मेरे मित्र, देवियों और सज्जनों, आज जब मैं आपके सामने खड़ा हूं तो मुझे स्पष्ट अनुभव हो रहा है कि मैं देश की वित्तीय राजधानी में खड़ा हूं, देश की वित्तीय राजधानी में खड़ा हूं। और जहां मैं रहता हूं, जहां हम दिल्ली में जहां से आते हैं, तो हम लोग देश की राजधानी से आते हैं। और अगर आप वित्तीय क्षेत्र के प्रतिनिधि हैं, अगर आप लोग सब वित्तीय क्षेत्र के प्रतिनिधि हैं, तो हम लोग जनता के प्रतिनिधि हैं। और जिस प्रकार से अभी अरुंधति जी बता रही थी और उसके पहले भी जो वक्ताओं ने कहा है, और आप सब लोगों को यह महसूस भी हो रहा होगा कि आज के समय वित्तीय क्षेत्र में और जनता के बीच, देश के बीच एक तनाव सा थोड़ा बहुत खड़ा हो चुका है। और इसको मीडिया में इसकी चर्चा हो रही है, सदन में इसकी चर्चा हो रही है। एक तनाव सा बन गया है, परंतु ऐसा होना नहीं चाहिए। तनाव की कोई जरूरत नहीं है। और हमारा काम अब यह होना चाहिए और हमारा लक्ष्य यह होना चाहिए कि इस तनाव को हम लोग एक सामान्य बना दें, एक भागीदारी बना दें। तो आज के जो मैं कुछ प्रमुख बिंदु जो पेश करूंगा, मेरी कोशिश यही होगी कि इस तनाव को किस तरीके से हम लोग एक भागीदारी बना दें। और इस पे मैं 3 प्रमुख विषयों पे बात करना चाहूंगा, 3 प्रमुख विषयों पे मैं थोड़ा उल्लेख करूंगा। और पहला ये होगा कि अगर हम जनता के प्रतिनिधि हैं, अगर हम लोग देश की जो आशाएं हैं, देश की जो अपेक्षाएं हैं, अगर हम उसके जिम्मेवार हैं, तो क्या हमारे लक्ष्य होने चाहिए वित्तीय क्षेत्र के लिए, फाइनेंशियल सेक्टर के लिए हमारे ऑब्जेक्टिव्स क्या होने चाहिए, पहली बात। दूसरा विषय यह है कि आज के समय जो पिछले 2 सालों में हमारी नीतियां रही हैं, जो हमारे पॉलिसीज रहे हैं, उनमें से हम किस प्रकार से परिवर्तन और बदलाव हम लोगों ने वित्तीय क्षेत्र में लाया है, उसके बारे में मैं थोड़ी चर्चा करूंगा। और अंतिम जो विषय है वो ये है कि इन सब समय में जो इतना परिवर्तन का समय है, इतना बदलाव का समय है, इसमें सरकार की क्या भूमिका होनी चाहिए, सरकार को क्या करना चाहिए। तो ये मेरे 3 प्रमुख बिंदु होंगे, इन पे मैं थोड़ा चर्चा आज करना चाहूंगा आप सबके सामने। सो एज आई सेड, वी हैव टू चेंज what we perceive today as tension, as conflict in some ways, between the needs of the financial sector and what the needs of the people are right now. And what it manifests itself primarily in a fundamental way is really around what the objectives for the financial sector are. So let me first touch on those. First and foremost, and you've seen this as a very high priority, of course, for our government from the Honorable Prime Minister onwards, is the need for financial inclusion. As you all know, despite the fact that we've had a robust, a flourishing financial sector for decades, India, in fact, has produced world leaders as far as our financial institutions are concerned. More than 50% of the country remained unbanked and unfunded when we assumed office in May 2014. So a very high priority for us was to be able to put together the reach, the access, the coverage, as well as the products that will enable us to reach all Indians and all citizens of this country. And that remains for us, whether it is through Jan Dhan, Mudra, Jeevan Suraksha, and so on, a primary overriding goal for us, which is to achieve financial inclusion. That is an overriding priority. The second very important priority for us is to have efficient allocation of capital. And that spans a wide range of issues, turning from how many and what types of financial institutions we have, the nature of our equity and our debt and our derivative markets, as well as the kinds of instruments and products that are available in India and offshore, and the tax regime that goes along with the allocation of capital. So we are spending a lot of time thinking about whether our financial system is equipped, sophisticated, deep, and liquid enough to be able to allocate capital appropriately. And that's a very important second objective for us. The third, of course, is that we have to think about the future. So, ladies and gentlemen, as we think about the future, we have to ensure that our financial institutions are competitive, have sufficient capital and are appropriately regulated so that we are in fact able to provide financial inclusion as well as serve as efficient allocators of capital. If our financial institutions are not vibrant, if they are not competitive, if they are not sufficiently capitalized, then we can't achieve our first two objectives. So these are in a way what our overriding priorities are for the financial sector. And naturally, as I said, अगर तनाव बन रहा है, क्योंकि जो हमारे जो लक्ष्य हैं और जो आज के समय जो फाइनेंशियल सेक्टर है, वो उसकी क्षमता में थोड़ी कमी है, क्योंकि ये हम पूरी तरीके से ये जो लक्ष्य हैं इनको हम हासिल नहीं कर सकते हैं. That is what introduces the tension in some ways, because the objectives versus the inherent capabilities and the manner in which the financial sector is structured right now creates certain gaps, certain tensions. Now, we have to develop the right policies, we have to put in place the right regulations so that we can in fact move towards these goals. And in the last 2 years, the thrust of our policy making has been to close these gaps. Now, what are some of the very important measures that we've undertaken as far as policies are concerned? First and foremost, as you know, and as Srimati Bhattacharya was also pointing out, we have dramatically increased the number of new entrants into the financial sector, particularly as far as deposit-taking institutions are concerned. But it also includes insurance. So, if in the last decade in the UPA, there was not a single banking license given out, in our 2 years, we've given out 23 banking licenses. 2 scheduled commercial banks, 10 small banks, and 11 payment banks. So we've given out 23 banking licenses in 2 years, whereas in the last 10 years, not a single banking license had been given out. In insurance, we've enabled 49% FDI in insurance, which has meant significant FDI coming into the insurance sector, and the insurance sector really picking up in terms of activities and in terms of new products being offered. And that is also leading to much more vibrant activity as far as insurance is concerned. Similarly, we've opened up ARCs for 100% FDI, which was announced in the budget. And as far as asset management is concerned, there as well, we've created 49% FDI in pension assets as well. So we are massively expanding and opening up the sector to new entrants, which is adding capacity. That's been a major policy-making thrust on our part, is to open up and bring in a whole host of new entrants and well-capitalized entrants as well. The second thing, of course, stemming from new entrants coming in, has been competition for deposits, as we have all been discussing. Because we have competition for deposits, we are in a situation where there is more choice available for our consumers. Obviously, coverage and access as far as our financial networks are concerned opens up. We have, in fact, the post office also coming in as a payment bank with its 1.55 lakh post offices, which means very strong competition from deposits with somebody with a very well-developed, far-flung network. So there is tremendous competition for deposits, which we think is going to be good for consumers and the citizens of this country. That's a second major effort that we've undertaken as far as policy is concerned. The third, of course, is technology changes, which Srimati Bhattacharya also spoke about at length, and so I won't dwell on it, but I'll just highlight a couple of things here. Number one is the recent announcement of the Unified Payment Interface that the Governor of the Reserve Bank just did a few days ago. This is an incredible game changer in terms of the ability to be able to transfer money at low cost, very efficiently, very conveniently, without having to go through a cumbersome two-factor authentication process, but at the same time make it very secure. This is, I think, a major, major step forward as far as making it possible for us to be able to enable access and inclusion for all the citizens of this country. I was just with the Honorable Prime Minister when we saw a demonstration in Noida of electric rickshaws. And what was really remarkable about that demonstration was the fact that these electric rickshaws could be dispatched with a ride-sharing company, it was Ola in this particular case, but that the payments to that electric rickshawala, the payment to that driver could be made entirely through your mobile phone, simply by transferring in a completely digital way money from the person who was taking the ride to the actual rickshaw driver. This is the future. This is what we can see happening with the unified payment interface. The other very notable aspect of what is happening from the technology point of view is obviously the Aadhaar bill. And with the Aadhaar bill, authentication becomes so much easier. You can do a quick lookup, you can do a quick verification of somebody's identity, and that in itself is a major step forward. But what it enables us to do in terms of credit histories and understanding what is it that is going to define the creditworthiness of an individual for all individuals will enable us to bring down friction, will bring down borrowing costs, and for things like universal